Can money really make more money? Yes, through proper investment. I'm Dr. Bharathi Sunil from Finance and Accounting Academy channel. Investment is not only for rich people. It is a smart habit everyone should understand. What is investment? Now I'll explain you what is investment. So investment means it is committing our money, whatever we are having today, after meeting all our present needs. That means meeting our current consumption needs. Then when whatever the money we are saving, that money we will be using to make some investment. And why we make investment? Because we want to earn some income or profit in the future. So what you have understood here, whatever the income we are getting, out of that income will meet our present financial needs, means we meet our present consumption needs, and after that whatever we are saving, that money will use to make investments for earning some returns in future and also to have capital appreciation. See here, if you take the example of individual, why the individual is making investment? Because he is having some excess money over his expenditure. So whatever the money he is having excess, that money he will use to make investment in shares, bonds, debentures, and also in other form of assets like gold, silver, real estate, or bank deposit accounts. Suppose if companies are having extra income, then what they will do, they will invest their money in expansion of their business or diversification of their business. So what is expansion? Means say if they are producing now 10,000 cars, now they will increase that to 12,000 or 14,000 based on the income extra whatever they are having with them. And the same way, what is diversification? Say if the company is producing only cars now they can also make manufacturing of bikes or autos, etc. Right? So this is called what? Diversification. Or they can also start new venture, means apart from automobile industry, they can also start some petrochemical business or pharmaceutical business, right? Now it is very clear to you that why we make investment is made to earn some income and also to have some capital appreciation. Say for example, if you are investing in shares, then whatever the money you are investing, if the value of the share is increasing, means the market value of the share is increasing, that means when you have purchased that share, that time the share value was 100 rupees. Now the share value is 800 rupees, means the value of share got increased from 100 to 800. This is called what? Capital appreciation. And also you are receiving dividends from these shares. So say for example, you are receiving 3% of dividend. 3% on investment of shares is called your income, right? In the same way, if you take the example of one building which you have purchased for commercial purpose, means if you want to give this building on rental basis, so whatever the incomes you are earning in the form of rent, that is called your regular income. And if the building value is appreciating, say when you bought that building it was 1 crore, now the building worth is now the building is having 1.5 crores worth, means the increase in the value of building by 50 lakhs is called what? Capital appreciation. So this is called investment. So how we are making investment? Our present consumption is sacrificed to get a return in the future, and also sometimes we can also have capital appreciation like what I have quoted in the previous examples. Say if you are purchasing a house for personal use, then it is not called investment, because here you are using that particular house for your purpose only. You are not letting out that you are not giving that house for rental basis, means you are not earning any income out of the purchase of house investment, right? So when it is not yielding any financial return, it is not called investment. Now we'll see characteristics of investment. So what's the first characteristic? Risk and return. Here, whatever the investment we are making, here we are expecting returns. So when we are expecting returns, we have to bear risk also. So investment always involves a relationship between risk and return. So if you are investing in higher risk investments, you will get higher returns. Like if you are investing in shares, here there is more risk. So when there is more risk, we can expect more return also. So higher risk, higher return. In the same way, when we are investing in lower risk investments like fixed deposits, here the risk is very moderate, right? So in that case, we'll have moderate returns, but what we have safer returns. Now coming to the second characteristic, liquidity. Liquidity means what here? When our investments can be easily convertible into cash. Whenever we are making any investment, why we make investment? Because we want to use this investment in future when we are having any requirement of money, right? So when we want to sell these shares or whenever we want to sell these investments, we should easily convert, means we should quickly convert that into cash. So when we are converting that investments into cash form quickly, it should not have much loss in their value. Clear? So here we are having two types of liquid investments. Highly liquid investments means whatever the money we are saving in our savings account, whenever we want money, we can easily withdraw that money, or when we can transfer our money to other persons whenever we have to make any payments. Like we are using Google Pay, Phone Pay, BMAP, or we are using checks, demand draft. So all these are called what? Converting our savings amount money into making payments. So this is highly liquid for us. Next, listed shares. If the shares are listed in stock exchange, we can easily sell those shares in stock market. So highly liquid investments means here we can take the example of savings bank account and listed shares. And what are less liquid investments? Less liquid investments. Here we will take the example of real estate. Means we are having our investment in fixed assets form, means physical assets like land or buildings. So if you want to convert that land or building into cash form, is that can be possible quickly? No, because it will take time to find a buyer, means the buyer who can afford to pay our demanded price. So all this can't be possible very quickly. So that is why these investments are called what? Less liquid investments. So like real estate, even if you invest in long-term bonds also, we have to wait for that period because we can't easily convert that into cash. Coming to the third characteristic, time horizon. So here every investment, whatever we are making, that is for a particular period, that is called specific period investment, right? So that can be short term, means whenever we are making any investment for less than 1 year, it is called what? Short term investment. Next, medium term investment means here our investment period is from 1 year to 5 years. Next, long term investment means above 5 years, whatever the investment we are making, that is called what? Long term investment. And why we have to make long term investments? What is the reason? What is the advantage of this long term investment? So if you are investing in long term investments, it is helping for wealth creation, and also it is reducing our market fluctuations of our investments. That is why we have to invest for longer period to have very good appreciation in our investment value. Now coming to the fourth one, diversification. What is diversification? Means we are not investing all our money, whatever we have saved, in only one investment. Here we are diversifying. That means what? Instead of putting all eggs into one basket, if you put all eggs into one basket, what will happen? If one egg got damaged, then all other eggs also will be spoiled, right? So that is why what we should do, we should diversify our investment. So don't put all amount into only one type of investment. Like for example, we are having some 10 lakhs rupees. So what you do, you invest some amount in shares, some amount in mutual funds, some amount in gold, some amount in bonds, some amount in real estate. So this will make us to see that some investments are made at low risk, some investments are made at higher risk, so that we can balance our investments. So high risk and low risk investments, what will happen finally, will be balancing our investments. In the same way, in diversification, I will also give you another example. If you are investing in shares, don't invest all your amount only in one company share. For example, if you are investing all your money in only in petrochemical business, suppose because of any reason, if petrochemical shares are having very lower market price, are facing any problems, then what will happen, our investment will be facing loss. So don't invest all your amounts in only one type of industry shares. So what you do, you diversify your investment in shares into different type of industries, like pharmaceutical industry, petrochemical industry, construction industry, banking industry. So like this, you diversify your investments. Then what will happen, this will definitely reduce the impact of losses from only one investment. Now coming to the fifth characteristic, goal oriented. What is the meaning of this goal oriented? So why we make investments? Because we are having some financial goals. Say for example, when you want to buy one house, it is one goal. If you want to invest money for your children's education, that is one goal. Say for example, if you want to save money for your retired life, means it's called what, retirement planning objective, right? And like this, whenever we are having some financial goals, based on that financial goals only you make investment. So whenever we have to make investment, first you think about your financial goal, so based on that you make investments. Apart from these five characteristics, there are some additional characteristics of investment. So now we are talking about sixth one. What is that? Safety. So whenever we are having some savings, what is our intention? We want to, because it is our hard-earned money. So whatever the investments we are making, we want that investment more safe. That is why we have to invest only in those investments where our principal amount is protected as much as possible. Now coming to the seventh characteristic, regular income. And so in this, whatever the investments we are making, on that we want to earn some regular income. Say if you are investing in shares, we want to have dividends. Say if you are investing in real estate, means buildings, then what we are expecting, we are expecting regular rent. Say we are investing in bank deposits, so what you are expecting, you are expecting interest regularly. Understood? So this is seventh characteristic of investment. Now coming to the eighth one. What is eighth one? Capital appreciation. So all investors, apart from receiving regular income out of their investment, they want their investment is to be appreciated. Appreciated means increase in the value of asset over a period of time. So this will definitely build our wealth, right? So capital appreciation is the objective of investors, along with regular income earning. Next, ninth one, marketability. So whatever the investments we are making, we want to have that investments to be easily marketable. Means, so what is marketability? Whatever the investments we are making, that should be easily bought and sold. So if there is any problem in purchasing, if there is any difficulty in purchasing or selling of those investments, then it's not called marketable. So please remember that when whatever the investments you are making, see that those investments are easily marketable. Now coming to the 10th one, tax benefits. So make investments in those securities or in those funds. Say for example, if you are making investment in public provident fund, or if you are making investment in life insurance policies, or if you are making investment in any ELSs, these will provide you tax advantage. So how you get this tax advantage? Based on government rules and regulations. If you are making investments in some type of funds, definitely what you will get? You will get tax advantage. So these are all what? Characteristics of investments. I want to conclude that invest wisely today for a financially secure tomorrow. Thanks for watching. Please like, share and subscribe for more videos on commerce and management concepts.